What's going on? It's the #1 salon suite coach. You can actually Google that. Patrice Sway McKinney, and I made over $1.7 million owning salon suite businesses. If I had to start over today, the #1 thing I would do differently is use OPM. That's other people's money. Now, in today's video, I'm going to show you how we gotten our mentees millions of dollars in business funding to start a salon suite business in their city. I've helped tens of thousands of people get into this business, and I'm the #1 coach in this space when it comes to my students seeing real results. For example, Joy Braden, we got her $135,000 in funding so she can start her salon suite business. Kim Elliott, we got her $130,000 in business funding. And Bridget Watkins, we got her $150,000 in funding so she can start her salon suite business. Now, she may not need all of that money, but hey, we got her more than enough so she can actually get her start in this industry. Now, before we dive in, for those of you who do not know what a salon suite is, it's basically when you take a large commercial space, you break it into smaller rooms, and you lease each room to different beauty professionals. For example, hairstylists, barbers, lash techs, estheticians, and they pay you every single week to lease a suite from your business. Now, if this sounds like something you'd be interested in starting, I encourage you to hit the first link in the description below. Register for my free live training. It's virtual, so you can join from anywhere in the world, and I'll be breaking down the business model step by step and how you can get your start. All right, now back to the video. Now, everybody's journey is going to be different. Listen, I remember when I opened my very first salon suite, I had no idea about OPM. I literally used my own money. I borrowed money from my sister, from my family, from my friends, and it was just hell trying to get all of that money. But I did make it happen. But I wish I would have known about OPM when I first started. Now, let me first give you a few tips about credit, because yes, some of you guys say, well, do I need good credit to get business funding, to get any type of funding? The answer is yes. So if you haven't started already, make sure you start either repairing or building your credit. So some people may need to repair, but there are some situations where people actually need to build their credit. Now, when it comes to funding, the lenders do not necessarily focus on the score, but more so the credit profile. So here's a few tips when it comes to keeping your credit in good standings once you are in a good position to get funding. First and foremost, no late payments, guys. Listen, it doesn't matter if you pay on time for 3, 4, 5 years. When you have one late payment, they treat you like you didn't make all those payments on time. It sucks, but it's just how it works. So no missed payments, all right? And in the event that you do miss a payment, make sure you call the lender immediately and request a one-time goodwill adjustment. They almost always will give you that, but it's only one time, all right? Another way to avoid a missed payment is try using autopay. That way you don't have to manually go and make the payments. Also, you don't want any derogatory marks in the last 1 or 2 years to qualify for funding, and you want at least a 690 to 700 credit score, and typically you can qualify for some type of funding. Now, you guys may have heard of credit utilization. You may have called a credit company and they say, hey, your credit utilization is high. What does that mean? That means you have used most of your money, right? If you have a credit card that's $30,000 and you use $27,000 of that, you're going to have a high credit utilization. It's probably going to be like 80, 90%. You want to make sure your credit utilization is at least 30%, preferably 15 to 20%, but no more than 30% for credit utilization. So one tip that you can do is you want to pay your balance before the statement closing date. So the statement closing date is going to be different than your due date. How do you find out what that statement closing date is? Call the lender and they will tell you exactly when that date is. If you pay before that date, it will keep your utilization low. So when you're ready to go get funding, you'll be in good position. If possible, you can also request a credit limit increase. I typically like to request a credit limit increase every 6 to 12 months. You want to make sure that there is no hard increase for that credit lease, all right, or credit increase. Now, in the event that you do have more than one increase, because you don't want to do more than 2 to 3 increases per year, but in the event that you have more, you can dispute these increases, right? You can get them removed. When you are disputing whether it's an inquiry or an error, you want to dispute it very aggressively. You have to be very aggressive with disputing things from your credit report, but it works if you're consistent. So you want to make sure you have some type of credit monitoring. Typically, it costs about $20 or $30 per month. And then you want to check every single month. Check your report every single month, not just when you're about to apply, but you want to make sure that you're always in a position to go and get funding. And then you want to follow up every 30 days until it is resolved. But keep disputing. Do not get discouraged if it doesn't work the first or the second time. All right. Sometimes it can take 3, 4, or 5 times to win a dispute. Also, never close any old accounts because you want that history. The only exception is if that account is negatively affecting your profile, then you maybe can consider closing it. But other than that, you never want to close any old accounts. Now, how do we build our credit, right? We talked a little bit about having to repair your credit and having to build the credit. So some of you don't necessarily have bad credit. You just need to boost it. How can you do that? One of the most common ways people boost their credit is through the authorized user strategy. So that's basically when you find someone who has an account that typically has pretty good history and low utilization. You want to make sure their account is in good standing. They're going to add you to the account, and this is going to show on your profile as if it is your own account. So this is a very common way that people boost their credit score before they either go get funding or purchase a home or purchase a car. Okay. Now, when it comes to funding, we talk about OPM, other people's money. This does not mean that you go and ask your relative or your cousin. This means that you go to the bank. Now, again, I've said this in one of my videos before. This is not a broke person strategy. Even the wealthy people who have millions of dollars in their account, they still use the OPM strategy. Why? It helps build credit power, right? It also strengthens your payment history and you have available credit. Another thing, it separates your risk from cash. So instead of putting the risk on your savings, you put it on the borrowed capital. Right? Again, this is a wealthy strategy. They all do this. So make sure you're very familiar with OPM. Now, how do we use OPM? Listen, you only want to get funding if you are going to create some type of cash flowing business, right? If it's not cash flowing, then you need to rethink it. All right. This is not for your lifestyle. This is not to just go buy clothes, jewelry. This is for you to make sure you create some type of cash flowing business. Now, before you sign any agreements and before you accept any funds, make sure you are very clear on the terms. Make sure you understand how it gets paid back, when it gets paid back. Make sure you understand the worst case scenario, right? And make sure you understand how fast you can either refinance or liquidate the funds. All right. But make sure you ask tons of questions to really understand what exactly you're signing. Listen, there's a such thing as good debt and bad debt. Debt is a good tool. It's not income, right? But again, if it doesn't produce or multiply money, then it's not considered a good debt. Now, if you made it to the end, thank you for watching and taking time out of your day to soak up this knowledge. My goal is to drop videos every single Friday, so I look forward to seeing you guys next week. Be sure to like, comment, subscribe, share this video if you haven't already. It means a ton. Also, follow me on all social media platforms at Sway_the Pro. Thank you guys in advance, and I'll see you next week.